Hello and welcome friends to Trade Talks. This will be the weekly review, the trades what we have taken on the last week. As I was traveling on Monday, so I have not taken any trades on Monday. We'll be analyzing what were the trades we have taken last week, how the market behaved, and as well as we'll plan for the next week. So let's dive directly on the charts. So let's start from Monday. Monday was basically momentum was there on Monday, and then the market started kicking in momentum after we closed below 18,800. So I did not trade on Monday. Monday was good opportunity. Then on Tuesday I started trading, and the stop loss got hit at this particular place at 18,672 level. The arrival was very strong, and this was not good trade to be taken. But okay, the stop loss hunting happened. This indicates that there is a strong support at 18,660 levels, and then the market rallies significantly. And then after that, market went sideways, and on Wednesday there was no specific trade. So this was 1 hour stop loss hit, and then on Thursday, the due to choppiness, Nifty short straddle strategy, 1 hour was hit, and then on Friday there was no trade. And yes, on Tuesday, the Fin Nifty also 1 hour stop loss got hit because it was swinging on both the sides. A V-shaped recovery, it costed almost 1 hour of stop loss in Fin Nifty as well. So the total week I have closed with minus 3 R, R being the risk taken per trade. So total minus 3 R is the loss for this whole week. So let's dive on the trade setup for the next week. As we know that India VIX is hovering around 11.2, so we see a day range of 130 points and week range of 290 points. Close below 18,640 levels can trigger a momentum till 18,450 level. So this is a clear-cut drop of 200 points. We might see some consolidation in and around 18,600 to 550 levels. But yes, this consolidation may not last, and again the momentum might continue till 18,450. 18,450 is a very strong support zone, and on the supply side, we can consider taking short positions at 18,720 level. So if market gives us an opportunity at this particular place with a slow arrival, then we might take short positions at 18,720 with a tight stop loss of 18,580 levels, 590 level, 18,760 levels. So the short trades would be 18,725 with an SL of 18,750, 760 with a target of at least 1 is to 2. And market might pick up momentum at this particular place. If we get a close below 18,640, 650 levels, then I might considering buying put options to capture the momentum till 18,450 levels. And there is a couple of scenarios which we'll consider and a trade plan. If we get a close above 18,760, then this scenario number one can come into play, and we might cross all-time high, taking us to 18,900 levels, 900, 950 levels. So this might be a 200, 300 point of rally, all the way from 18,650 to 18,950. But this scenario can be considered only if we get a close above 18,760 levels. And then the next is bullish consolidation scenario where 18,720 supply zone is honored, and in a tight range market consolidates for the whole week. This scenario is low probable scenario, and as well as this scenario is also low probable scenario. If we get a close, then only we'll be considering scenario number one. And scenario number two also, if we get a rejection from 18,730 levels and a consolidation starts happening, then we'll be considering scenario number two. Scenario number three, where market takes rejection at 18,720 and consolidates in and around 18,550 levels. So this can be possible. This is a probable scenario, and highly probable scenario which I consider, which I'll be looking forward to take trades aggressively, is if the market opens gap down, slightly gap down or flat, goes up little bit, and then market consolidates, market picks up momentum on the downside, taking support at 18,460 levels. So in this kind of scenario, in scenario number one, we'll be taking future positions with a very tight put hedge, put positions hedge, so that if the market goes up, we can capture this momentum. And if the supply zone is honored, at 18,730 levels. Then we'll be opening short straddle at 18,700. And if the market breaks 18,660 levels, then only we'll be considering scenario number 3, 4, and 5. So scenario number in case of scenario number 3, if market honor the supply zone and starts consolidating for 1 or 2 days, then we'll be opening a short straddle of 18,600 and 550 levels. And in case the market starts building up below 18,550 levels, then scenario number 4 will come into play, and momentum might pick up till 18,460 levels. So highly probable scenario is this scenario number 4, where market picks up momentum on the downside and taking some consolidation for 1 day, and again the momentum picks up. So we might see a 2 day of good momentum of roughly 130 points on one direction. So this can come into play in scenario number 4. Scenario number 5 will be considering only if we get a close below 18,350 levels, then only we'll be considering scenario number 5. So overall, the trade plan for the next week at Monday market opening, we'll wait and watch and see if the market gives us gap down open. Then we'll be buying put options to capture the momentum till 18,460 level. If market opens flat and goes slightly up, then we'll be building our put positions with a tight stop loss of 18,760 level. So if the market comes at 18,700 levels, we'll be buying put so that we can take the advantage of this supply, and the momentum might come into play, come into picture if we get a close below 18,650 levels. So we'll be buying put, not we'll be buying aggressive puts if market opens gap up with a very tight stop loss of 18,760. So ideal scenario will be market opening slightly gap up and continues further slightly up and taking a supply at this particular place, and momentum is picking up on the downside. And the scenario number and yes, if market gap downs open significantly, roughly by 60-70 points, then we'll be buying puts, but in a very less quantity because the momentum might fade off in 1 or 2 days itself. So there are three scenarios in Monday open trade setup. Gap up open, market continues upward, we'll be buying puts. Flat opens and market and gives a close below 18,640 levels, then we'll be buying put slightly aggressively. And if market opens gap down or in and around 18,580 levels or 600 levels, then we'll be buying puts, but with a very less quantity to capture the momentum with till 18,450 levels. But the risk reward is not favorable because when we'll be buying puts at this particular place, our stop loss will be very big. So we'll be buying put option with very less quantity, so that we'll capture this and we'll exit very early. So that is the trade plan for the next week. As next week being the monthly close, so we might see volatility on both the side, and a range of 300 can come into play for the next week. So we might see market going up till 720 and dropping till 18400 and again rising till 18500. So we might see a good range of 300 points. This 300 points can come into play. So that is the overall trade plan for the next week. Bank Nifty, I'm considering opening short positions if we get a close below 18,000, 43,350, as the immediate support is at 42,930 levels only, and that is also not that good of a support. We might see a good drop or good significant momentum till 42,160 level. So we need a confirmation till we get a close below 43,350 levels. Then only we might consider considering buying puts in Bank Nifty. And one more key aspect in Bank Nifty, that market has given a bearish close in Bank Nifty as well as in Nifty. Nifty, we are seeing a bearish cloud cover scenario where this momentum has been taken out almost by 50-60%. So the market might come down significantly and then again revert to mean at 18,577. So this kind of trades can happen. Hammer kind of candle can come into play for the coming week. So hammer kind of candle can be formed in the daily on the weekly charts. So this kind of candle I'm expecting to come into play for the coming weeks. And on the Bank Nifty also, Immediate support, as I have already mentioned, is in and around 42,000. So we might get into momentum play if we get a close below 43,260, 270 levels. We'll get a good momentum on the downside. So let's see how the market gives us opportunity on the Bank Nifty also. And the immediate supply zone is at 43, 44,000. If we get a close above 44,000, then we might hit 44,800, 900 also high also, because this high might be taken out in no time. This whole compression might be taken out within two trading sessions itself. So any close above 43,800 or 850, then we might taking call options to capture the further taking of all-time high and giving us a close above 44,600 levels also. So if we get a close above 43,800, then I'll be buying calls to capture this good amount of momentum. This compression won't last for 2 to 3 trading session itself. So a range extension kind of move can happen in this week. So it's better to be prepared on both the sides. If there is weakness on Bank Nifty, then we might see a good momentum on the Nifty as well, because Bank Nifty is holding up very tight. And if we see a further weakness in Bank Nifty, then this good amount of momentum can come into play. That's it for the trading scenario and trading plan for the next week. I'll be joining tomorrow morning, and thank you for joining Trade Talks.